Creating your first trade plan. Welcome back. In the previous modules, we've connected our brokers, configured our account settings, and created our trading strategy. Now it's finally time to create our very first trade plan. One of Qbar Trade's core philosophies is simple: plan first, execute later. Every professional trade should begin with a well-defined plan before any order is sent to the market. Let's build one from scratch. Step 1. Click on the new plan. The first field is the plan name. Give your plan a name. This is simply a label that helps you identify the trade later. For this example, I'll call it Nifty Breakout. You can name your plans however you like based on the setup, stock name, event, or any convention that makes sense to you. A meaningful name makes reviewing and searching your trades much easier in the future. Step 2. Select the segment. Next, choose the market segment. Qbar Trade supports multiple segments depending on your broker and trading style. For this demonstration, we'll select futures. Selecting the correct segment ensures that the planner applies the appropriate calculations and product settings for that market. Step 3. Select the instrument. Now search for the instrument you want to trade. In this example, we'll select Nifty 30 June futures. Once selected, Qbar Trade automatically associates all future calculations with this instrument. Step 4. Choose the direction. Next, choose whether this is a buy or sell trade. Selecting long means you're expecting prices to move higher. Selecting short means you're planning to profit from a downward move. For this walkthrough, we'll choose long. Step 5. Understanding trigger types. Now we've reached one of the most important decisions in the planner. When should this trade become active? Qbar Trade provides 3 different trigger methods: time trigger, price trigger, indicator trigger. Each one is designed for a different style of trading. Let's look at them one by one. Time trigger. We'll begin with the time trigger. When you select time, you'll specify the exact date and time at which this trading plan should become active. For this demonstration, I'll set the trigger date to June 13th, 2026 and the trigger time to 9:20 am. Why 9:20 am? Many traders avoid entering immediately at market open because of the high volatility during the opening minutes. Instead, they prefer waiting until the market settles before acting. Imagine you've completed all your analysis the previous evening and decided tomorrow at exactly 9:20 am, I want this trade to become active regardless of where the price is trading. In that case, a time trigger is the perfect choice. Another practical example would be an end-of-day trader who only takes positions after 3:15 pm. Once the daily trend is almost confirmed, time triggers are ideal whenever your strategy depends on when something happens rather than where the market is trading. Price trigger. Now let's switch to price trigger, which is one of the most commonly used trigger methods and the one we'll use for the remainder of this walkthrough. Suppose Nifty 30 June futures is currently trading around 25,180. After analyzing the chart, you've identified that the real breakout only occurs above 25,250. Instead of buying immediately, you simply tell Qbar Trade, activate this trade only if Nifty trades at or above 25,250. So we'll enter 25,250 as our trigger price. From this point onward, Qbar Trade continuously monitors the market. If Nifty reaches that level tomorrow, next week, or even within the next few minutes, the plan becomes active. If it never reaches that level, the trade simply remains inactive.